what's happening right now on a step above where we play, and that would be the LBMA and the COMEX. In the month of September, the LBMA, the London Bullion Market Association, their vaults in London delivered. Now that means they lost. So it was delivered off the exchange over 45,166,000 ounces of silver. And that is more than the entire registered category of the COMEX. The registered category is the bars, or are the bars that are eligible for delivery, which are now under 48 million ounces, 38 million. The country of India took possession in the month of August of about 37 million ounces of silver. 1 month's delivery to India, or 1 month's delivery off the LBMA, is 8 million ounces more than the COMEX has, backing the entire price-setting mechanism of the world. If you take all of the bars that are in the COMEX, those, all of them, which would be the eligible, which are bars that are held by ETFs, by strong hands, by companies, by family offices, by anyone who's leaving it to be stored in a COMEX vault. If you take all of that, the open interest, meaning the number of contracts that could say, well, I want this to be delivered right now, is equal to 226% of all the vaulted silver. And if you just look at the registered silver, those bars that are pledged to be delivered if requested, the open interest is 1,800% of the registered silver. So if everyone in the registered category, or everyone who has these bars, wanted delivery of the bars, that would be the registered category, 1 out of 18 people would get their silver, and everyone else would be cash settled. This is a situation that really can't last if you're talking about the epicenter of price discovery for the world in precious metals. And so what you are seeing, whether it be on the LBMA or on the COMEX, is record bleeding down of supplies, to where on the LBMA in the London vaults, it's the lowest level of silver since they've ever started recording inventories. And when you look at what's happening on COMEX, from silver squeeze to where we are right now, the drawdown has been extraordinary, and we're under 40 million ounces. We're very close to the all-time low, which I think is about 20 million ounces. We're at 38 right now. But look, if you realize that, in 1 month, 45 million ounces was delivered off the LBMA, what does that say for the amount of silver backing the COMEX? It's a very concerning situation. And so I think whether you're talking the retail investor who is scared leaving their money in the bank, or the highest up investor, the most sophisticated investors, the most well-informed investors, the one closest to the information, well, they're afraid to leave their metal for 1 second longer in the vaults, in the system, and they're pulling it out, where last week in 1 day, 5% of all the good delivery gold bars were delivered off the COMEX in 1 day. And last month, 45% of all the mini contract bars on COMEX, the kilo bars, over 25 million ounces delivered in 1 day. Who's got this kind of money? And if price is a reflection of demand, then where is all this metal going? And why are the most well-funded and well-informed traders on the planet systematically draining the stockpiles from the top on down? And of course, when you get to the wholesale market, which we've talked about the last few weeks, into the retail market, I've never seen anything like it. It's literally systematically disappearing, and I show zero sign of it letting up. This is what I have been talking about. The frightening thing about it is that in my mind's eye, what I have talked about on your show about product disappearing continually and the industry being defined by a lack of supply, is when the public at large has an aha moment, and we're not there yet. So this is disappearing before the aha moment, and that tells me that the smart money, the big money who understands the dilemma that faces the dollar in this economy, is doing what they can to position themselves before that aha moment happens. And so, yeah, it's real, and it's concerning.
The other thing we've been seeing is runaway premiums on just about everything. It's been just astonishing. Those who've been stacking metals for years and years, sometimes decades, I've spoken with people, and they'll say, I never pay more than $2 over spot or whatever it is, and I haven't for decades or whatever. But we've seen since the beginning of COVID almost without let up, complete breakaway of premiums and physical prices rising above the paper price. In some cases, it's so extreme. I mean, we did a hot news announcement about 3 months ago, right after the Sprott conference, where we were saying record high buybacks for swaps on Silver Eagles. I think it was 10 and a quarter at the time. Now we're $12 over on buybacks for Silver Eagles. None of us have seen this before. Can you talk to us about the phenomenon with premiums just completely separating the physical metal market from the spot price?
But what's more concerning to me is how it's now transitioned to gold. And I talked about that when the Mint came to me in July and said, we're going to curtail production of gold by 50%. And I couldn't understand why the heck they were going to do that. Because everyone's been buying silver. You're beginning to see it in gold as well. And it's a reflection of supply and demand, wholly and completely and totally a reflection of supply and demand. And the bottom line is that, there is far more demand for physical refined product than there is supply, and those premiums are a direct reflection of that. And you're right, they haven't let up. And one of the unique things about this environment is that any time I've seen these distortions in price, they typically resolve themselves with, not much more than a few weeks or a few months. We're going on 3 years where it hasn't. And in fact, it's only gotten tougher. And if you're a company like mine, if you're not one of the 4 or 5 major precious metals companies who has the ability to buy $10 million worth of product from the distributors and pay immediately, they're not even going to call you when there's product available. You're going to wake up one morning and there was a release of product and it's gone, because the bigger players who pay quickly and have the ability to write out large checks are getting all the product, and everyone else is fighting for the scraps. We've talked about how the fact that no one sells us anything right now, even with these high premiums, I don't see anyone selling anything by and large. And so the secondary market is void of product, and the mints are struggling to keep up. The refiners are struggling to keep up. Half of them are in Europe and are wondering how they're going to keep the lights on over the winter. And so this is a situation that I don't see getting better anytime soon. In fact, I see it getting worse because we haven't had the aha moment yet. And we will have that aha moment. We're going to have the market correction. We're going to have a collapse of some sort at some point. We have to. And when that happens and people are looking for an alternative, a place to put their money safely, I think they're out of luck at that point. If the market continues to behave in terms of supply the way it is, now you add into it supply chain issues in terms of trucking and transportation. When we buy stuff from the Perth Mint, when we buy stuff from the British UK Mint or Austria or Australia, or the United Kingdom, that's all coming. I don't know if they use diesel fuel in ships. I'm assuming they do. The trucks that drive across the country to our vault, well, those are all diesel. And supply chains problems are not, precious metals are not immune to those supply chain problems either. So yeah, this is all a big jumbled mess that you try to figure it out. And I try to say this stuff, it's hard to talk to the public and say supply's running out, you better hurry up, without it sounding like salesmanship. I'm glad that you've been in this long enough to know that that's not the case, and you can validate it for me. Okay, all I can tell you is that I still see people that are waiting for this pullback in silver. They're out of their mind. People tell me all the time, I'm waiting for that one big pullback in silver before I jump in. I will promise you, there will be nothing for you to get. And I talked to my operations today, and he's buying kangaroos that are now 60 days out into 2023. We're paying for them now, and we're running logistics on it for the next 60 days. By the time it gets in our warehouse, it'll all be sold, pre-sold. So that's what it's come to. I've talked about this before, but you're talking 45 to 60 days out on most of the sovereign items that we're ordering into 2023, and it's disconcerting to say the least.